The Architect of the Invisible, a comprehensive guide to Northrop Grumman, NOC. As of March 5, 2026, Northrop Grumman Corporation, ticker NOC, has solidified its reputation as the silent pioneer of the global defense industrial complex. While competitors often capture headlines with commercial airline drama or tactical hardware, Northrop Grumman has spent the last decade securing a near monopoly on the most critical, high-stakes technology in existence, the United States nuclear triad. For an investor today, NOC represents a bet on strategic deterrence. It is the only company responsible for two of the three legs of the American nuclear defense system, the ground-based missiles and the stealth bombers. Following a powerful Q4 2025 earnings beat on January 27, 2026, where the company reported adjusted earnings of $7.23 per share, the stock is trading near record highs. This guide explores the company's massive $96 billion backlog, the 2026 acceleration of the B-21 Raider, and the complex restructuring of the Sentinel ICBM program. 1. The business model, 4 pillars of dominance. Northrop Grumman is structured to be the primary partner for the U.S. Department of Defense in the most contested environments, areas where stealth and high-end sensors are the only way to survive. Aeronautics systems, about $11 to $12 billion revenue. This is the home of the B-21 Raider. In 2026, this segment is transitioning from a research loss into a production engine. It also produces the autonomous Global Hawk and MQ-4C Triton drones and creates the center fuselage for every F-35 fighter jet. Space systems, about $14 to $15 billion revenue. Northrop is a leader in space-based surveillance and secure military communications. In early 2026, this segment is benefiting from the Space Force expansion, providing the satellites that track hypersonic threats from orbit. Mission systems, about $11 billion revenue. This is the software and sensors arm. They make the radars, electronic warfare systems, and cyber-secure communications that allow different military branches to talk to each other in real time. In 2025, this segment was the company's most consistent growth performer. Defense systems, about $6 billion revenue. This segment focuses on munitions, missile defense, and the sustainment of existing weapon systems. In early 2026, it is seeing a surge in international demand for high-tech counters to shoulder-fired missiles and drone swarms. 2. The crown jewel, the B-21 Raider acceleration. The single most important catalyst for NOC in 2026 is the B-21 Raider, the world's first sixth-generation aircraft. The March 2026 production deal. Just last week, on February 23, 2026, the U.S. Air Force and Northrop Grumman reached a landmark agreement to increase B-21 production capacity by 25%. The funding. The deal utilizes $4.5 billion in funding authorized in late 2025 to accelerate the delivery of the stealth bomber fleet. The digital twin success. Because the B-21 was designed entirely in a digital environment, Northrop has reported that software certification time has been cut by 50%, allowing the plane to enter service much faster than the previous B-2 bombers. Investment impact. For investors, this acceleration is a de-risking event. It moves the program from the expensive and uncertain flight test phase into the profitable high-rate production phase. 3. The Sentinel Challenge, navigating the Nunn-McCurdy breach. While the B-21 is a success story, the LGM-35A Sentinel, the new nuclear ground leg, is Northrop's most complex challenge in 2026. Restructuring the nuclear ground leg. In 2024, the Sentinel program suffered a Nunn-McCurdy breach. It went over budget. However, in early 2026, the U.S. military has certified that the program is too critical to fail. The 2026 pivot. Northrop is currently restructuring the program to build modular silos rather than refurbishing 60-year-old ones. The 2027 milestone. While production won't start until later this decade, a critical test launch is planned for 2027. The risk. Until a new, fully baked cost estimate arrives at the end of 2026, the Sentinel program remains an execution overhang on the stock's valuation. 4. Financial performance. The $96 billion fortress. Northrop Grumman enters March 2026 with a balance sheet that reflects massive multi-year visibility. Key data points as of Q1 2026. Record backlog. The company has a record $95.7 billion backlog, ensuring that its factories remain busy through the 2030s. 2026 guidance. Northrop expects sales of $43.5 to $44.0 billion and adjusted earnings per share of $27.40 to $27.90. Free cash flow. Management has reaffirmed 2026 free cash flow guidance of $3.1 billion to $3.5 billion. Capital return. On March 11, 2026, the company will pay its latest quarterly dividend of $2.31 per share. With a payout ratio of only 31%, the dividend has significant room to grow. 5. The space frontier. Guarding the high ground. Northrop Grumman is arguably a space company disguised as a defense contractor. In 2026, its space systems segment is a primary growth driver. Satellite servicing. Northrop is a leader in mission extension vehicles, satellites that can latch on to older satellites to refuel them or move them, essentially extending the life of multi-billion-dollar orbital assets. Tactical space. In early 2026, the company is delivering a new constellation of small, low-orbit satellites designed to provide unjammable communication for soldiers on the ground. This tactical space market is growing faster than the traditional large satellite market. 6. Critical risks. What could derail the investment? Despite the strong momentum, an investment in NOC in 2026 carries 3 specific risks. Program concentration. Northrop is heavily dependent on a few massive multi-decade programs, B-21 and Sentinel. If a future U.S. administration cancels one of these programs to save money, NOC's valuation floor would be shattered. Margin pressure. High-tech R&D is expensive. While revenue is growing, operating margins in the Aeronautics segment have been under pressure due to the fixed-price nature of early production lots. If inflation in 2026 stays higher than expected, Northrop's profits could be squeezed. The Sentinel execution. The Sentinel program is the largest government project of the century. It involved digging up thousands of miles of fiber optic cable and building 450 new nuclear silos across 5 states. The logistical nightmare potential is high. 7. Strategy. How to position NOC today. As of March 5, 2026, NOC is trading near $795 per share, representing a price-to-earnings ratio of approximately 24 to 26 times. This is near the high end of its historical range. The long-term compounder strategy. The value support level. Analysts see fair value for the stock around $721, suggesting only about 4% upside from current prices in the short term. However, the intrinsic value based on future cash flows is often estimated lower, around $530. This gap shows that you are currently paying a premium for security. Dollar cost averaging. Because the stock is up 55% over the last year, it is currently overbought on some technical indicators. A prudent entry strategy would be to buy 50% now and wait for the Sentinel restructuring report at the end of the year to finish the position. The nuclear hedge. In a world where global arms control treaties like New START have expired in early 2026, the demand for nuclear modernization is a structural tailwind. NOC is the only way to play this specific theme. Conclusion: the silent guard of the 21st century. Northrop Grumman NOC in 2026 is the quintessential infrastructure of deterrence. It does not make planes that compete for the lowest ticket price, it makes the machines that ensure those planes can fly in peace. By securing the B